Hi everyone, welcome back to today's episode with Alex from Financial Navigator. Appreciate it coming on today. Thank you very much. So how did you
All right.
kind of start learning about investing and kind of what's your background in your professional career and how you kind of find out about personal finance?
So I actually don't have a background in finance at all. I'm an electrician by trade, and it's purely become, I would say, more of an obsession than a hobby because it's every minute of my day is whether I'm in a car, in the van on the way to work, listening to some sort of podcast or something that's going on in the world down to markets or crypto. I kind of started in, I want to say March 2020. It was really on Revolut banking app. I first bought, I think, Bitcoin, I want to say May on Revolut at around 7 grand, and then got into Tesla pretty early as well. Managed to get into all of them before what happened the following 2 years from that. And obviously, at the time, I was working, had money in the bank, doing nothing. So I thought, right, let's put it to work. Didn't really think much of it, but started putting it in. And I was doing maybe 50 quid, 150 quid at a time. This is like kind of like DCAing without even knowing I was actually DCAing myself. And I was logging into my app maybe 1 week, 2 weeks later, and my Tesla or my C or whatever other stocks I had at the time, and my Bitcoin had all like doubled. I was like, "Wow, what is this?" It's like free money. And that's when you dive down the rabbit hole, and I still haven't come out the other end because it's a never-ending
Yeah, the
thing. You're
same with me,
constantly
and
learning.
same kind of background as well. Because I don't come from a finance background, but it's taken over my life, learning about investing and finance. So, what's kind
Yeah.
of the end goal and the obsession of it? Like for me, it was always about: is there a way I can kind of work for myself, quit my job, and kind of get my money to work for me rather than sitting in a bank account, like you said? Is there kind of a goal you have in mind when you
Mm.
started investing?
Yeah, definitely, man. It opens up your mind to what is doable in life rather than this average 9 to 5 working, grinding for till you're 50, 57, get your pension, then you retire. And I mean, a lot of the blokes that I work with or have worked with in the past haven't even got pensions. They're in their 40s, late 50s, and they're worried about what to do in their older lives and they've got nothing. Um, Even if they did have a pension, they're still like, well, I don't want to be working at 60, 70. So I've always said the magic number is 35. I want to be financially independent at 35, where like, i.e., you don't have to look at a price tag and worry about anything. But at the moment, I mean, unfortunately, I've been doing quite a bit of networking over the last 6 months. I've talked to multimillionaires, had one-to-one conversations, talked to loads of people. I can reference a couple of channels and that later on for people to follow and whatnot. But at the minute, I was in two minds of coming out because I've just recently qualified electrician as of about 2 months ago, going into finance or looking for a financial role within the thing. But a lot of the, well, I say more experienced individuals that I spoke to have said, look, at the moment it's quite uncertain times. You're in a recession-proof job, so kind of stick with it for now would be their advice, and then see how you get on. Just keep it as a side hustle sort of thing, go in for it, and then see where you end up or where the markets are, how the world's getting on in a couple of years' time, and then go from there sort of
Yeah,
thing.
why do you, like you mentioned how a lot of people get stuck in a trap of working a job for a long time which they don't actually enjoy? Like, what do you think it is that's preventing
Mm.
people from, is it kind of a lack of education around investing and pensions that is kind of keeping people in that rat race?
I think it's a lot of it is comfort. That is the biggest thing that I've noticed when it comes to anything in life, it's changing your everyday life. So, i.e., if you start the gym, I gym pretty much every day if I can. Normally do 4 to 5 times a week, and I don't actually remember what I did before I gymmed. It sounds weird, but I'm like, okay. It's the same with investing now. I'm like, what the hell did I used to do with my time and my money? And I wasn't putting it to work. So I think it's change of people's everyday lives that they fear. And like the old saying that I tell we've got quite a close-knit group of friends. I tell them all the time, and I bang on about investing constantly, no matter if we're out or whatever it is. And they just go, "Oh Christ, don't get him started," because I don't stop. And it is like, if you're scared money doesn't make money, if you're afraid to put your money into anything, like whether it be a car, it could be a fancy investment watch, it could be anything. If you're that bit hesitant and don't have full clarity of what you're investing in, you're going to talk yourself out of it effectively. So you could invest in a stock. Let's say we invested in Tesla just before the stock splits in 2020, and you see you've made 30%, and then maybe you see a bit of FUD come out on the news, or a car set alight or whatever, or someone was driving, someone was injured, and you see this news flash. You're like, oh crap, like the stock's going to be hit hard, when actually that's probably a very minor issue. So you might panic sell or whatever. And that, from what I've learned in the 2 years that I've been investing fully, is that I've done that. I've seen these big news headlines, and I've made that mistake of going, oh, like maybe I should shave a bit off the top. I've done it, and then obviously what happens? It just, the next day, literally like the next day, is the opposite. It just goes mental.
I think I'm exactly the same in terms of like my friends and family, like always talking to people about starting to invest, and they say, oh, but it's too risky, what if it loses all of its money, right? But then you realize that people who happily spend money on things that are guaranteed to lose money. So I think it's like the risk, as you said. But I think as someone who's a bit younger, like, I'm happy to take the risk because I've done the research, and it
Definitely.
I've educated myself about how the stock market works. Like you said, if stocks go down, it's usually just emotional reactions from investors, but actually the fundamentals, the revenue of the company is going to be unaffected by that like small piece of news, like you said.
Yeah, 100%. I mean, especially because I'm only 23 as of currently, and I speak to people that have. I mean, I started doing these little one-to-ones off of the Instagram. I've only done one. It went quite well, and he was a 34-year-old bricklayer. I'm not going to mention names or anything, but he just wanted general. Like, how does he start investing? And I was like, well, the first thing is, if I need you to be able to manage money. I'm not a financial advisor, but if you can't manage your monthly wage and your outgoings, I can't expect you to then manage any sort of investment at all, because it's just basics, to be honest. Like, some of the guys I work with, like apprentices, they didn't know what a stock was. And as silly as it sounds, some people don't in this world. So it's literally basics. And then you tell them about a stock, and then I bang out about crypto all the time because that's where I kind of focus. But crypto's a whole other level. Like, it's a different ball game compared to stocks. I know they're correlated within the markets. Like at the minute, if you look at the total crypto market cap, it kind of follows the S&P. Has been a bit off as of like the last 2 weeks, but it's a whole nother subject. Because a couple of the boys in my group, I've had like one-to-one meetings with. I've had 5 or 6 with each of them, and the meetings last anywhere from 2 to 3 hours, because there is so much information to go over, and how things work, and how like markets are interlinked. Like, every little thing, whether it be over in China or up in Canada, could change something where you are, be it in Europe or the UK or down in South America.
Yeah. And what is it, do you think schools could be doing better about kind of educating people about the simple things about what investments are?
Yeah, I think they've got to. There's literally nothing, from what I remember of my secondary school, even primary school, there is nothing on how to manage your money. Like, nothing. I didn't do business or anything in school, so I don't know about that sort of those subjects, what they teach. But from what I remember, just basic money management, it's not even there. So a lot of people, they have to go out and do it themselves. And a lot of these people, they want to invest. Like, I had a young guy come up with me in the gym, a friend of a friend. He's 17. He goes, I want to invest and start trading. And again, it was the same thing. I was like, well, how do you expect to do that when you only got say £200. It's like, you can do it, but you need to have a foundation. Like, you need to be able to budget. You need to be able to save. You need to be able to have money aside, like an emergency pile for a car or whatever. Say you're driving, your car tire pops. If you ain't got the spare £120 to get that repaired, you ain't going to work the next day. I mean, you might be in a lucky enough scenario that you're still living with your parents and they can do you the run. But if you are on your own at that age, because I know some people are, you've got no option. So you've got to kind of put that time and effort in to managing your money. And it's a long process, don't get me wrong. When I remember starting, I was like, Christ, I was like, what is this? So I started tracking my net worth, probably 2021. And at the time, I was just going through every bank account and every account that I've ever put anything in, just trying to figure what was there. It took me, I want to say, about 3-4 days before I nailed the first proper my net worth.
It's almost shocking, right? When you start. I remember reading the first kind of personal finance books and watching the first few personal finance videos online. I was like, this, it makes it so simple to me that it's actually possible to build wealth, which I never imagined before. I think as well, like a lot of people are pushed by their school to kind of go into uni when they don't actually know as well what they're interested in. Like for me, I did an apprenticeship and it was brilliant. Like I got to kind of work my way up in a company and have a decent wage for my age. Whereas, like I remember at school that the open day was like that they were almost trying to push everyone towards uni. But I think apprenticeships are great as well. I think in terms of kind of starting to make your own money.
I mean, I don't know what the apprenticeships are towards. Like, obviously, I don't know what you did to use your apprenticeship, but I know trade apprenticeships. My experience of a trade apprenticeship was awful, but I still would rather have done what I've done than go to university, because you are learning and earning at the same time, and it gives you that opportunity, like you say, to work your way up within a company. I've changed company as of the start of last year, so I've been with my new company just over a year now, and that was just to finish off my apprenticeship because of my old company. They weren't helping. But I do feel that, like you say, schools are very heavily orientated. Oh, go to uni, do this, do that. Okay, I believe that you should go to uni if you want to do a really, really specific job, like maybe veterinary or doctors or like lawyers. But other things I just don't agree with, because they're coming out of uni with 30, 40, 50 grand worth of debt, and they don't know how to manage that debt. That's the big thing. Like, especially, I feel sorry for teachers more than anything, because they come out of uni with this 30, 40, 50 grand of debt, and they go into a teaching job earning nothing, for awful money for what they do. And yet, I remember some of my old school teachers, they were only just towards paying their debts off at the age of 50. And you're like, that is crazy. So I can't imagine what it is for kids coming out of uni now with higher interest rates and whatnot, and how long they'll last for. So I'm just thankful that I made this decision to have an apprenticeship. Yes, it ended up being about 5.5 years or whatever it was in the end. It was only meant to be 4. But I learned on the way there, and I took this up as like a full-time obsession.
Yeah. Well, I mean, how do you see kind of the current economic trends in the UK? Because inflation, I think, is it's keeping so many people kind of. I mean, you look at the UK wages; they're not great after tax with how expensive things are now. And I think as well that people believe that inflation is slowing down. It means that things are going to get cheaper, but it doesn't mean that things get cheaper. It just means things are slowing down in which the rate of they're accelerating. So what are kind of the basic financial habits you kind of adopted and that people can kind of start to manage their money?
I mean, for basics, like apps wise, I've done a small post on my page. The best banking app I've used just for general, like, sectioning out your money is Starling Bank. Like, I'm not with them anymore purely because Lloyd's had the deal, or whatever, you bank switch £200, because I've got a spreadsheet or whatnot I keep track of anyway. But if you don't want to go through the time of setting that up, Starling Bank is perfect because you've got all your spaces. I think I had about 8 spaces because I had like a car, I'd have like health. So I always keep a bit of money aside because personally I try and go private healthcare if I can. Just anything to do with the NHS now takes forever. Like, long story short, going back to last year, I was actually ill for 3 months. I couldn't walk. I was pretty much paralysed. I had reactive arthritis. I tried to get into a hospital to get some treatment, and they wouldn't let you through the door because they were full. And you're like, right. So that's when I kind of, me having that one-to-one experience with it, I'd always heard stories of it. I then made that decision to have private healthcare. So now I'll try and have private healthcare. So I put that bit of money aside in a section for that. Then I'd have one for like sports, then holidays, emergency fund, like silly things like Christmas presents. And that's another big one that people don't save for, and they dread coming to the end of the year towards Christmas because they're like, oh crap, I've got to spend this, that, and the other on it. Like, you can spend a bit of money, you haven't got to go silly. Like, I know people that spend 400, 500, 600 quid on a person at Christmas, and you're like, it's crazy. Like, personally, I give everyone the same budget, and it's normally about £100 because I don't see the point in me having to blow, say, a month's wages on all these people in the space of a week. But Starling Bank, definitely really good. The other one I've been using lately, still not mastered it, but it's Money Hub. It's a bit more complicated, takes a bit more time to kind of learn, but you only really learn by using the app. That's definitely one I'm looking to. The other thing, what was the other one I used? Revolut is also pretty good, to be fair. They've got Vaults, which is pretty much like the Starling Spaces. And it was a quick way for people, if they want to get to investing, to have a look at. But obviously, nowadays, there's so many other exchanges and whatnot that you can use and go via. I think the big one that everyone probably knows of is Trading 212. So that's a great place to start if you want to do investing. But like other money saving things is like, there's about 5 apps on my phone, like Jam Donut, is it Quidco, loads of other like saving cashback things. Like, it sounds silly, but if you can get 3% cashback on something, then why not take it? Like the Chase Bank, they've got a 1% cashback card. Just use it, because at the end of the day, you're going to spend your money on your Santander or your First Direct and you get nothing back. But you use a Chase card and you're getting 1%. It don't sound like a lot at the time, but over a period of a year, if you've spending 20, 30 grand, it all adds up. So basically stuff like that. And a lot of the banks nowadays, they do offer like cashback or 30% off in certain stores and whatnot. So it's just finding those bank accounts that have the best offers. So I moved to Lloyd's from Starling purely because Starling didn't offer the discounts and cashbacks on stuff, but the Lloyd's did. I mean, it cost me, I think, £10 a month or whatever it is, but for the money I spend in it or whatnot, I probably earn that back. So it's definitely worth the change. And then credit cards as well, I think, is a massively underrated thing. I was very hesitant when I started with it. But the benefits that come with credit cards nowadays are like surprising, to be honest, because I think my Amex, I've got phone cover, I've got European health cover, I've got winter sports cover, I've got breakdown cover as well. And it's just like saved a lot of things, especially when people, they still go to like the post office and buy holiday insurance. And nowadays you can have it by getting a free Amex. Like, it's crazy. You haven't got to pay anything for it and you got it. And also they have a lot of offers on there as well.
Yeah,
so
there's lots of great tools out there now. I think personal finance and investing has started to become more accessible because of apps like you mentioned, like Trading 212 and Revolut. You can kind of start investing with like £5, whereas like obviously in history is much more difficult than that. Do you think like social media is kind of pushing more people towards kind of learning about finance and encouraging more people to start investing as well?
I mean, I would like to think so, but then again, everyone's algorithm's different, because obviously we are in the finance world all the time. Our algorithms probably pump finance stuff at 24/7. But for the people that don't really look at it or pay much attention, I don't know how much of it they see, which is why obviously like accounts like me and yourself, we share each other's content. We try and get it out there to those people that might just push them to taking that first step. And hopefully after they've taken that first step, it's kind of like they just keep going sort of thing.
Yeah, I think your algorithm does kind of reflect your interests because it's designed to keep you hooked on the app, and show you things that you like. So I think when I've had things that have gone viral, and it starts to reach almost like the mainstream or people's For You page or Explore page that aren't interested in finance, you tend to get a lot of the comments from people who are more negative in talking about money, because there's still a lot of stigma around the stock market, I think, with a lot of people.
Yeah, definitely. I mean, it's not plain sailing. A lot of people think it's plain sailing, like it's just easy money you sit on it. But I mean, I've got a BP stock at the minute, which was probably my best performing stock over the last, say, 2 years. I think it's about 77% up, and then like Meta, it fell off an absolute cliff. But if you manage to get in that period of what I think is a couple months off the top of my head, you're probably sitting at about 70% up at the minute. So, and I know, I think it was Charles Schwab come out with the predicted S&P returns for the next decade was anywhere between 7 to 10%. And if you've done 70% in a space of a couple months, happy days. But obviously you've got to diversify that thing, because I've had other ones like Argo Blockchain, which is a UK-based Bitcoin mining company, down 96%. 96%. Like, it seems ridiculous. But seeing your money go from, say, £1,000 down to about 36 quid, you're like, what? Like, it's mental. But it's just having that conviction in those companies. So you've got to just be able to sit there, sit it out. But the way I look at it personally, because me and yourselves are quite young, we can take maximum risk. Because at the end of the day, like, I'm in a lucky enough situation that if I was to lose, say, 20 grand of my portfolio, I'm not going to be homeless. I won't be on the street. I'm not going to have food to eat. Like, I'll still be surviving. Whereas I know some people can't take those amount of risks. So it's all just, the first thing I do when I have to one-to-one is ask you what their risk tolerance is, see what is happening in their life. Like, it's quite a deep chat, to be honest, because you have to know the ins and outs of it. It's not as simple as, oh, right, you've got to do this, and this. You've got to save a bit here, you've got to do this there. It's like everyone is different. And I think that's like when I've got an account with St James's Place Welfare Management, and I wanted to organise a chat with my advisor about the emerging markets. And I called him. I was like, right. So I had a load of questions written down and went to rattle them off to him. And he goes, oh, I can't answer these. I was like, well, can you put me in contact with someone that can? He's like, well, I've got a leaflet. Well, that's no good. I want to speak to someone, like a one-to-one sort of thing. And I think that's the thing nowadays, that a lot of financial companies, whether it's big ones or smallish ones, they don't have that one-to-one thing. And I think for a lot of people, that is a big thing. Because if you can get to someone on a one-to-one level and have that intimate conversation about like their finances, it's a massive help.
Yeah, I think controlling your emotions as well as an investor is like one of the number one things, because when I was new, I made lots of mistakes, panic selling. I think there's a quote from Peter Lynch who said he invested in a stock for $30. It went all the way down to $4. And obviously most people in that situation would have given up on that stock, but it ended up going all the way up to 100 plus. So even though the share price can be completely disconnected to what's going on in the company, if you know and believe in the future of that company's ability to keep making revenue, keep growing revenue, then you have to kind of stick through those dips, because no stock's just going to be a straight line upwards. Like, it's going to have dips. It's going to have.
Well, it's like Amazon had 390% plus drops, and look where they are today. So, like you say, you just got to have conviction in what you invest
100%. And how can people kind of? You mentioned about diversification. Obviously, there's things you can do in terms of kind of going into different industries, different asset classes. What do you think about kind of staying diversified?
I mean, I think diversification is, I'd say one of the biggest parts of investing, because if you have all your eggs in one basket, it only takes one thing and it wipes you out. Whereas if you've got your nest egg spread over 5 different sectors as such, then if one could possibly outperform the other massively, so if one was to go down, say 80% or whatever, the other one could outperform maybe by going 200-300%. Like, you don't know. So this is why I think, I mean, I'm going to give a shout out to Real Vision. I'm a Plus member. I'm not a pro macro or pro crypto, but I joined them in August last year. After seeing Raoul, you probably heard of Raoul Powell, but watching his stuff on YouTube, and his global macro investor pieces that it's a paid partnership with the biggest banks all around the world and money management funds read. But he posts the odd thing on Twitter that's free, like the odd segment from it. So I decided to take the plunge. Okay, it cost, I think it was at the time about $600, I want to say, for the subscription. But they had an academy on there at the time, and it takes you through everything you need to start investing. Literally from risk management to diversification to what drives markets, like the simplest of things. It gives you everything in one area. And I want to say it's about 30 hours worth of video footage. Don't get me wrong, it's a lot to take in. But they also go deeper down the rabbit holes like DMARC indicators, trading, and all that stuff on there as well. So I think when it comes to diversification, you've got to have at least a minimum, I would have say 4 sectors. Like if you're doing stocks, maybe have like a healthcare, insurance, then technology or something. But then when it comes to wider investing, having the likes of physical gold, commodities, maybe even like fine wine and whiskey, and then having maybe like crypto, and then having your stocks. And there's so many like even watches. I don't know anything about investment piece of watches, but I've made contact with a friend of a friend. I'm hoping to have a talk with him soon about investment watches because I ain't got a clue about them. But it's another way of me to diversify my portfolio, because a lot of the videos I've been watching on YouTube and Real Vision at the minute, and on Real Vision they have all the best, like the top people in the world that know their stuff. And everyone's opinion is different. And a lot of the people I've heard at the minute, they're saying if you can end this year with the money you started with, you've actually done really well. So even if you've gone through a whole year and nothing, and you've just survived another day to invest again, then you've actually done really well, because a lot of them are saying it's the most uncertain times they've ever known. So when you've got the top people saying that, for little people like me and yourself, you're like, well, what are we meant to do? And all you can do is just diversify and hope that those diversify things you've chosen hold out effectively. Because sitting in cash at the minute, I don't see is an option, especially in the UK.
I mean, inflation is so crazy right now, right? And so what's your approach to cryptocurrencies? You mentioned kind of diversifying into crypto as well as stocks. Are you more long-term investing, trading, or looking at altcoins? What's kind of your approach?
So I've only really started trading like day to month trading, short-term trading, as of the last, I want to say 3 to 4 months. Prior to that, I watched a lot of technical, and there's a lot of, I think, big Cheds trading on YouTube, really helpful. Got a big series on trading. I think Justin Bennett is another one. I think I've got a list on my laptop. I have the gap at the end. But there's a lot of people I was watching for a while before I even attempted putting a bit of capital to work, day trading. And I've had a couple of trades go really well, and a couple of them go absolutely the opposite way. But obviously, if you're risk managing with stop losses and take profits, then you kind of even yourself out. But when it comes to crypto, like I say, I'm very diversified, but the majority of my capital is within crypto, purely because, going back to earlier on, we are young and we can take the maximum risk, and that's where I see the maximum risk to reward is at the minute. Obviously, each token, coin, whatever you want to call it, has a different thing. I mean, I've probably hold over 20 cryptos in total, so I'm very diversified within that sector. The top ones of the portfolio are definitely Bitcoin and ETH, there's no doubt about it. But XRP, again, is pretty up high for me in my portfolio. But then again, a lot of people are like, oh, they've got a lawsuit like the SEC. If they lose it, the price is in a tank. I was like, it might tank in America, but it's not going to stop them building from around the world. And that's what they've continued to be doing whilst this has been going on. So that's where I kind of focus all my time. My stocks portfolio is really emerging markets, and then like gold and commodity mining companies. But other than that, I mean, I still have some of the technology companies in it. But I feel that this, from what I've read and whatnot, I mean, obviously none of this is financial advice, but listen to. But I think the commodities, especially gold, silver, platinum, uranium, and all of that, is going to do really well over this next decade. And you look at gold now in pound terms as well as dollars, it's pretty much at all-time highs. It's not far off. So something's happening. And if you look at a chart, gold, the same with kind of like crypto, is from the bottom left up and to the right. You look at the dollar index, it's only gone from the top left down to the bottom right, like it's totally inverse. So you're like, why do I want to be holding, say, the dollar? Because when I first started, I was looking at everything in pounds. I now look at everything in dollars. I don't talk in pounds. Even though I'm from the UK, the world reserve currency is in dollars. Everything is measured in dollars. So what's the point of me looking at something in pounds? So when I talk to people about it,
what are some of the risks with crypto? Because obviously it's extremely volatile, but there is also huge opportunity if you're approaching it in the right way. So how can kind of people manage risk?
Yeah. So I mean, like I said, I first started when it comes to crypto on Revolut. I literally stuck about 30, 40 quid in on Bitcoin, whatever it was. In a space of a week, it doubled. I was like, this is magic. What is this thing? Dove a bit deeper, understood what it was, and it was created at the back of the 2008 financial crisis as like a peer-to-peer payment system. I mean, when I'm explaining it to people that don't know what it is, you kind of have to explain it like digital gold, but I know there's a big stigma around it. It can't be digital gold because it's so volatile and it's not like pegged effectively. Like it hasn't been pretty stable. But then again, all you've got to do, like I remember I was buying crypto all the way up to $70,000 in 2021, then experienced my first 54% crash, and I watched my portfolio. I think at the time it was worth about 32,000, drop to about, I want to say about 15 to 12 in a space of about 3 weeks. I was like, whoa. Like, it was a massive shock to the system. But everything I'd learned from videos and whatnot was like, I was like, I've got to remember that's a short-term thing here. Like, I've invested it for the long term. Like, I'm not, my majority of my crypto portfolio, I won't be touching for years, like pulling profits. I might shave a bit off the top if some do silly returns. Like, I think I got into Matic at, I want to say 4p, ended up selling out at like 40p. So I want to say I initially put in about 450 quid, and it turned into about 4.5 to 5.5 grand or whatever it was. And I was like, okay, that is mental. So I shaved about 2 grand off. So I took more than my initial investment off. I'm like, okay, then the rest is house money. So I'll leave it to be. And I've still got it. I haven't sold any more. To be honest, I mean, every month I'm buying crypto. I'm buying gold, silver, stocks. I'm constantly putting money in because, as you've probably learned, dollar cost averaging is the best way to try and get into all these things. Because over the crypto, what people say could be the bottom at the minute, and within stocks, the S&P, like it's impossible to time a bottom. It's absolutely impossible. It's impossible to time a top as well. So as long as you're taking profits on the way up, like one of my quotes the other day was, no one ever went broke taking profits, because no one has. Like even if you were to shave 10% or 5% of your total amount off, say every 6 months, every 12 months, you've always got that bit of cash ready to go for the next opportunity. You might find something that you think is actually really undervalued. So it's best to take profits no matter what, even if you feel like, oh, it's only like a 13% thing. Like I did a trade that I did on cotton, and it took 9 weeks for the trade for my take profit to hit. But in the time, it was only a 13% profit trade. Nothing massive, nothing spectacular. But it was the first proper trade that I nailed. And I was like, actually, that 13% felt a lot better because than me just sitting on something, holding it for a year or whatever, and then going, oh, actually, look, like there's 40% or something like that. So like crypto, you've got to. It's quite a complicated world. Like you come into all these smart contracts and you hear about all these things and all these wallets you've got to have, all these seed phrases, and you're like, whoa, like it's mental. But YouTube and the internet is your best friend. If you don't understand a word or what a seed phrase is or what a MetaMask account is, just YouTube it. Like there's a video for everything. So you've just got to put the time and effort in to do the work. And it's the same with all the tokens. If you don't understand a token, YouTube it. You'll find 10, 15 videos explaining a token, and everyone's got a different explanation on it.
We've seen this year, like Bitcoin is already up like 60%. Is this kind of the start of the next bull run, do you think? Because I think when Bitcoin always tends to surpass its last all-time high, right? But obviously no one can predict it. But what do you think about kind of the current state of the market?
I mean, like I said earlier, the best people in the world don't know what's going to happen, and they're really uncertain. And they are saying, if you can keep what you've got now and you can get it to the end of the year and you don't lose anything, you've actually done really well. I mean, the way I'm playing the crypto market is at the minute I've shaven some profits off from when I was DCAing, when it was down at say $16,000 or whatever it was. I've shaved a couple of percent off because I've seen that 60% return in a space of 3 months or whatever it is. And you look at the altcoins, that's where your bigger percentages come from. But again, I've shaved some of them off because, okay, if it goes up to new all-time highs, I'm positioned, I'm ready because that's where the majority of my portfolio is in crypto. So me shaving a small 5% off here, 5% off there is not going to affect my long-term thesis. And like I said earlier, it's always good to have a bit of cash ready to go for the next thing. I mean, the other thing I haven't really got into is like airdrops. I haven't done an airdrop personally. I'm going to take the deep dive into it. But there's a guy on Twitter called, I wrote his name down, Mac N BTC. He posted 104 thread on Twitter about airdrops and everything you need to know. And it just opened my mind up to thinking, actually, I need to get on this because they're dropping you free money just for being active. Okay, you might have to spend $40, $50, $60 in transactions, getting it from this wallet to that wallet or whatever. But like people are earning 30, 40, 50, £1,000, like 50 grand just for doing simple basic things. So there's so much opportunity in the space. I think it's just putting the effort in to get it. Because I talked to the guys at work about it, and they're like, "Yeah, no one's going to give you £1,000 for free." And you're like, "Yeah, but they actually do. Like, it's there. It's happened." The same with NFTs as well. Like people get dropped NFTs, they think it's going to be worth nothing, and then all of a sudden it's worth silly amounts. Like I invested in NFTs, all of mine are pretty much worth nothing now. Like it was a dangerous game to play. It hasn't worked out. But what do you do? Well, that at the time, I got dragged in. That was kind of new. Got dragged into the whole hype around the NFT thing. Didn't understand it. Bought some projects. One of them actually did all right. Didn't pull the trigger. Didn't sell it. And now I'm stuck holding the bag. But there's nothing you can do.
Yeah.
So.
What do you think about kind of the reputation of the crypto space now that we've had there's been obviously the FTX collapse. There's been a few celebrity coins and projects that have collapsed and fallen away. Do you think kind of the reputation's been damaged a little bit?
I think it depends how deep you dive into it and what articles you looked at. I mean, I was lucky enough to dodge the Terra Luna collapse. I didn't hold any Terra. But I did on the way down when it got to, I can't remember what it was. I think I want to say about 30 cents. I actually bought some. I bought 150 quid's worth. And I thought, because hang on a minute, if they pull this round, the risk to reward is ridiculous because it fell. I don't know what the price was, but it was silly. $100, I think it was. So the risk to reward for me, okay, I lose 150 quid. Upside is potentially thousands. So I did it. It's worth nothing, literally nothing. Like, it's gone. And I lost a bit of money. I didn't have any money on an FTX account, but I held the FTT token. So that is probably worth about 20 quid now. I want to say I put in maybe £400 to £500 into that. So it happens. It's not easy, but like I say, I did my research in FTT. I believe that at the time, Sam Bankman-Fried was in with the higher up people. So I thought he was going to be one of the exchanges to survive over the bear market. He didn't end up being, completely collapsed. So I got punished for it. But this is what I'm saying, being diversified is a massive thing. If I'd put all my eggs in those two baskets, in Terra Luna and FTT, I'd be wiped out. But I haven't, because I've got such a diversified portfolio. I'm alive, I'm kicking, and I'm still here. I've got cash ready to go when these markets give me an opportunity to go again.
Risk I've taken in crypto is I bought £20 worth of Dogecoin. It's worth like £6 now, but again, like, it was £20, so it's not going to affect me. It was literally just a gamble, a high risk play, but like, I lost £14, so it's not something I'm going to worry about.
Yeah.
What about
I mean, with Dogecoin itself, personally, I think that's got a massive potential, because for whatever reason, Elon Musk seems to be obsessed with it. I know he's applied for a payment router and to go on Twitter. So, I mean, personally, I do hold Doge, because that is a risk to reward play that I'm willing to take. Because, like we saw, if you're in the space, over the 2 years of the Fed printing, God knows how many trillions, we saw when Elon Musk tweeted about Doge or whatever, do 80% run, 60% run in a matter of hours, like silly times. So a couple of them, I was just literally, like I said, DCAing into Doge, and all of a sudden I wake up, it's up 80%, so I just trim a bit off. I'd take maybe $50, $60 off. It just goes into a wallet, and it's there ready. Another big thing at the minute is stable coins. Everyone's very unsure with stable coins in the space. Like, who's the Fed going to go after next? Is it USDC? Is it Paxos? Is it USDT? Who are they going to go after? I mean, personally, I've taken the precaution and don't have any stable coins at the minute. I've put my stable coins into Bitcoin and ETH, because at the time it was USDC depegged after the Silicon Valley Bank went. I think it depegged from $1 down to, I want to say, I woke up and it was 88 cents. I then traded it for Bitcoin and ETH at 94 cents. So I lost 6 cents on the dollar. But what do you do? But making my decision, putting it into Bitcoin and Ethereum, I've now made my losses back from what was sitting in the USDT. But I now take that out and put it into a bank account, and then have the cash sitting there instead of a stable coin, because, like a lot of people, we don't know what's going to happen with the second America at the minute. Who are they going to go after? Who's going to survive?
What platforms are you using to buy and sell? And are you keeping coins offline, like using a ledger?
Yeah, 100%. You've got to use a cold wallet. So when I talk to people about crypto investing, I say you've got to start with 500 quid minimum, because first of all, you've got to spend £100 to 80 quid on a cold wallet. That's the first thing you've got to do. Before you even go think about getting on an exchange and buying anything, you've got to have your cold wallet, because to a lot of people, 300, 400, 500 quid is a lot of money. They don't want to lose it. So the beauty with crypto is you are your own bank, and you can't really kick yourself if you do something wrong. Don't be wrong, it's complicated. I know it's complicated. I've spent hours watching videos on MetaMask, using a ledger, this, that, and the other, learning how to use exchanges. I didn't know how to use Binance, didn't know how to use crypto.com, didn't know how to use any of them. But I now have learned through YouTube videos and spending my own time doing it. And I've sent crypto to the wrong wallet address. I missed out a digit. I didn't scan the QR codes. But when you're sending large amounts, you've got to send a little amount first. Make sure it goes through, then send the full amount. I think that transaction, I lost about 20 quid, so it wasn't the end of the world. But I know I've read things on Twitter of people losing 5, 6, 7 grand. I'd be absolutely heartbroken if I'd sent that and it's just vanished into like thin air. There's nothing you can do. You can't exactly call up Barclays and go, "Oh, I've been scammed." It doesn't work like that in this world. But like crypto exchanges I use normally for on-ramps. Revolut's still pretty good because you can withdraw only for Bitcoin, I would say, though, purely because you can withdraw your Bitcoin to the cold wallet. You can't withdraw any others. So Revolut's a pretty easy one to use. Crypto.com, I know there was a lot of FUD and whatnot about them a while back, but I believe there would be a long-lasting company. They managed to keep up with all the withdrawals that happened at the time. And I've personally had no issues with them. Okay, the withdrawal took a bit longer than, say, 5 minutes. It took about 10. But apart from that, I've had no issues with getting on and off of it. I getting money to my bank and putting money on to buy stuff and then removing it to my cold wallet. Binance, I was using a lot as well, or still use a lot, although I know they've had some issues. Well, I think they've been having issues with is it FCA here in the UK, like with their to do with their staking and whatnot. They've stopped staking in the UK now because I was staking on there. But again, I've still had no issues. You can't really get money onto Binance pretty easy because they don't do the bank transfer unless you pay like a 2% fee or whatever it is, a 1% fee. But with Crypto.com, I paid 0 fees. I just bank transfer it in. And then I literally, really, personally, I buy XRP on Crypto.com, then send that from there to Binance, and then just exchange it back into the dollar, USDT or USDC, whatever's there, whatever I think is best, will be USD. But other than that, there's not really many other apps I use. But I know a lot of the banks in the UK are getting funny about it. I think NatWest put a ban on it. I know Santander, they get funny if you send over $2,000 or whatever it is. They block your account, and then you have to call them up and go through the hassle of unblocking it, which I find it hilarious, to be honest, because it's your own money. You should be able to do what you want with it. Okay, I understand that people have been scammed. A friend of the family, elderly lady, she got scammed of 28.5 grand. So she got led down the yellow brick path. And unfortunately, in crypto, like I said earlier, you can't just call the bank up and get it back. So what do? There's nothing you can do. But again, to be honest, it was her fault.
I mean, there's so many scams right now, right? And they're absolutely everywhere online as well.
Loads.
I mean, I always tell my followers to just be super careful if someone's randomly messaging you, or telling you or promising you like unrealistic returns, or trying to get like kind of personal information from you. Yeah. Just always check with someone because they are absolutely everywhere right now.
If it's too good to be true, it often is. That's what my parents always told me when I was growing up, and it is true. Like if people say, "Oh, you can make £1,000 in a day or in a week," or if you give me 5, I can give you 10 in 2 months' time. You're like, that's not realistic, mate. Like you've got to. I know it sounds great. I know a lot of 17-year-olds, a lot of 18-year-olds that want quick money. I remember being that kid, seeing these people forex trading and stuff, and then paying for their signals and whatnot, and it'd just be a load of crap. You end up losing your money in the market because you don't know how anything works. You're just trying to follow this bloke off of Instagram that DM'd you. And like you say, you just got to do your own research on them, see if they are
a lot of them are making more money from the
memberships
into their group than they're actually making from what they're doing in the group, which is the whole kind of scheme that people fall for, unfortunately. What about are you working on any other kind of side hustles? You started creating content online. How have you found that?
Yeah, I mean, I was debating it for a while, and I thought this is one thing that when I just talk to general people, whether you're out and about or whatnot, you just get chatting, and they didn't know what crypto was, or they didn't know investing. Like I said, some of the apprentices at work didn't know what a stock was, and you're like, actually, like, I've got something to give. I spent hours, thousands of hours, watching videos, reading books on stuff, and you're like, now I can relay this off to people. I can help people. Like I had a DM last night on my page. It's the first one I've had, and he's like, "Your posts have really helped me start budgeting and saving." I was like, "Oh, great! I've made a difference." Like to one person, it might not seem like a lot to a lot of people, but to me, that's great. As long as I'm seeing something, that's all that matters to me. But if it's like a lot of people, a lot of kids my age, they don't have a lifetime ISA. I'm like, why? It's like, you've got inflation at 10%. They're paying you 25% interest. So you're cancelling that out and having more. Why not take advantage of that at the minute? Yes, okay, you probably need nowadays in the UK a decent deposit on a house. You're probably looking at 50, 60K. Like, you can do it with the 5% government scheme or whatever it is, but you don't want to be putting out a mortgage that's 30 plus years. You just don't want to. Like, for me personally, I don't think I'll be living in the UK long run. I don't feel it's for me. When I can go to the likes of Dubai and get a lot better like property, it's a lot nicer place in general. And for investment purposes, it's great because you pay no tax on anything. The tax advantages are huge. That's why a lot of people do it. So I think that's where I'll try and push myself. But to do that, I've got a lifetime ISA here. So I'm in a position at the minute where I'm waiting for the UK. I mean, it sounds bad, but I want the UK housing market to fall off a cliff because I've got the capital ready and waiting to go to make my first investment.
Yeah, very similar to myself. I think like I would definitely see my goal as well to kind of get away, get abroad more, because like my worst nightmare is getting into a mortgage for 30 years, which means that I have to have a job which I might not enjoy, and then being stuck in the same town, just paying off that house, paying every month, paying off the house.
Yeah.
Like I would rather invest, build up my net worth to the point where I can actually get into real estate as an investment rather than it being something that I'm trapped in. Like a lot of people, I think as well, kind of look badly on people who rent, but like I used to rent a flat and it was great because it had flexibility. Like after a year, when they tried to put the rent up, I said, well, like I can move somewhere else. I'm not stuck. Yeah, I'm not stuck in the same place. I can kind of have the freedom to go travel, move around to different places. So,
that was one thing I was looking at doing, was traveling, but then my financial head stops me from doing a lot of things. I was going to buy myself a nice new car, but my financial head won't let me. So instead of looking at, say, a BMW M3 or something, I'm looking at a Dacia Duster, which is like a Romanian. You can get a brand new one for 12 grand. Like, it's pennies compared to when you start looking at these other cars. But like going traveling, I was like, right, I'm young. I could go traveling now. I could blow 5-6 grand over 3 months or whatever it is, and then come back. I'd have to come back and earn more money before I wanted to do it again or whatnot. But why do that when I'm in a position where I can just sit? I believe my future investments will pay for me to go traveling for as long as I want down the line. So I want to sit back a bit, just relax. I've got a good income being an electrician. It's not like I'm earning crap money. So I'll just invest. I invest 60 to 70% of my monthly income. But it's pretty much all goes. End of the month, I leave myself minimal for going out and whatnot. But it's there because I am all, my head is all long run. It's all down the line. I'm not thinking of 6 months.
It's almost like years. When you start learning about investing, you become frugal because you realize that cash is important to put it to work. Like I find myself being super frugal, don't want to spend money on anything, because I know if I put it away, like I'm going to get a return that might one day help me quit my job because compound interest, it starts to grow and accelerate over time. So
when I'm speaking to these younger kids, I can't stress it enough that when you're 18, the earlier you can invest, the better. My sister's 17. I bought her some crypto it sounds boring, but for her Christmas present. She ain't got a clue what it is. She don't know how it works. But I've said to her, when you turn 18, I'm going to be getting you a cold wallet, and you're going to be DCAing into investments. We're going to get you a little investment portfolio set up, and you'll be investing. Because I can't stress enough how much better off you will be when you are started investing at 18. I went to a meetup that I actually organised myself in London. This is just prior to Christmas. I want to say early December. last year. Didn't expect many people to come. I invited a few people from Real Vision that I got chatting to, and then one of the ladies that actually works from Real Vision was over in London at the time. She turned up, and she come with another young lady. She was 29, and I got talking to her, and I was explaining her basically my journey of where I am today, and she said, I can't stress enough. She kind of stopped me from talking and said, look, I just need to tell you that you are going to have a bright future, sort of thing, because you are doing what I was doing at 25. She's now very well off at 29 years old, doesn't have to look at price tags, this, that, and the other. And she started at like 24, 25. I started at 21. So if you're getting in the game at 18, you've got a huge advantage over 90% of the population. Like, it is. I don't think people realise how big an advantage it is. Even if you're putting 10% of your weekly wage or monthly wage, whatever it is, aside just to invest, even if you stick it in an S&P 500 ETF or something, that 10, 15 years down the line, that little nest egg that you've been putting away that you didn't really, not going to make a big difference to your everyday life, could end up being a massive difference down the line.
Yeah, and it's going to sound really boring, but like Christmas presents, I'd honestly rather get like 50 quid's worth of Microsoft stock or something like that, because I know the benefit it will bring down the line. Because when I invest, I'm looking at it for 20. Because I'm only 22, I'm looking at my investments now. I'm not selling them for 20 years minimum. Like, I've got the time horizon to keep it there for a long, long time. So anything, even if it's a small amount now, 20 years from now, you've compounded hundreds of percents. So
yeah, that's the other thing. A lot of people don't know what compound interest is. It's so underrated. No one knows. But I talk to people about it, and they're like, "What's that?" And I'm like, "How do you not know?" Like, is it Einstein that said it was the eighth wonder of the world or whatever it was. Like, it's mental how that works. And when I have a one-to-one with people, I use the compound calculator, and they are gobsmacked at what, say you earn, like with crypto, because it is possible, you could earn 30% a year for, say, 10 years. Okay, yes, you might along the way get a 90% drop, but in some years you'll have a 200% gain. So if you conservatively say instead of getting a 200% gain for a year, you're a 90% idiot and you only get 20%, that compounded over a series of years, say 5 to 10 years, is a serious amount of money. It's not like it's just a little bit. It's life-changing amounts.
And, we're nearly at 1 hour already, so I think it's been a really great chat. There's plenty more things we could cover, but we should probably wrap up. So I think, where can people kind of find you online if they want to reach out?
I've only really got an Instagram at the minute. I haven't dove into the whole YouTube, TikTok, other socials. But you can find me at financial_navigator_ on Instagram. The little logo's got like a compass with like a light Bitcoin in the background. I mean, like I say, I've only just started offering these one-to-one sessions. I did the first couple of them for free. And after that, then we'll discuss this other things. But like I say, I'm not a financial advisor. I'm purely giving education on what I have learned over the last 2 years and how I would have done it differently had I been given the chance. So I find it great talking to other people, because when you go out and networking, if you're the smallest person in the room, like I have been at a lot of these events I've been to, like coders ended up turning up and they're talking about all this stuff and it's just going in one ear and out the other. Like, it's too complicated for me to understand. That's the best position for you to be in, because you just want to be all ears and try and take in everything that everyone says. I think that's another big step, is people have got to try and network, because your network at the end of the day is your net worth. If you're hanging around with people that are just happy with the standard 9 to 5, just want to pay their bills and have an easy life, then great. If you want to do that, fine. If you want that bit more, you don't want to be hanging around. You can have them as mates, but you don't want to be around them all the time, because you'll end up being that way. It sounds horrible,
spot
but
on.
it's just the way it is.
Yeah. Well, appreciate it very much. And yeah, thanks very much for coming on.